Hello, and thank you for joining us today as we go over net present value. We're going to look into the Board of Education's decision to keep full-size buses, buy minibuses, create new routes, or keep the old. So please stay tuned as we go over some of the math. The Board of Education has two choices: use the full-size buses on regular routes or use minibuses on shorter routes. If the Board of Education uses the minibuses, then there are two options for the full-size buses. Option 1, sell them now for $15,000. Option 2, keep the buses.
Hello, this is Sheba from financetrain.com. In this video, I will discuss how to calculate the net present value of a project. The net present value is the most commonly used measure used to decide whether to invest in a project or not. The net present value of a project is equal to the sum of the present value of all after-tax cash flows from the project minus the initial investment. So what we are essentially saying is that if the project will earn us so much money in each of the coming years, what will be the value of that money earned in today's terms? So we will get the present value of the future cash flows from the business. We know how much we have invested in the business. So NPV is the difference between these two. The investment decision using the NPV method will be based on whether the NPV is positive or negative. The NPV will be positive if the present value of all future earning is more than the money invested. A positive NPV indicates that the project is worth investing in. On the other hand, a negative NPV indicates that investing in the project will not be wise. The formula on screen is used to calculate the NPV of a project. The numerator represents the cash flow at time t. R represents the discount rate chosen to calculate the present value. This is also the desired rate from the project. T represents the number of periods for which we will receive the cash flows. Let's take a simple example to illustrate the calculation of NPV. Assume that your company is looking at investing $100 million in a capital project. The project will return post-tax cash flow of $30 million for 3 years and $50 million for the 4th year. Assume a discount rate of 10%. As you can see, the present value of all future cash flows is $108.76 million after considering a desired rate of 10%. This investment can be done for $100 million today. The wealth of the investor will increase by $8.76 million. Therefore, the investor should invest in this project. Thank you. Visit FinanceTrain.
Before we examine the best decision for the Board of Education, we're going to show you a short video about net present value. This is the net present value analysis of whether or not the Board of Education should sell the buses or keep them in reserve. If the Board of Education were to sell the full-size buses, they could profit $75,000. However, if they were to keep them in reserve, they could profit $90,125. Because option 2 is higher, then the Board of Education should keep the full-size buses on reserve. The next question we had to look at for the Board of Education was the net present value of full-size buses versus minibuses in new or old routes. Option number 1, full-size buses. The net savings is $36,000. Option 2, minibuses and new shorter routes, a negative $11,345. The net present value for acquiring minibuses is negative. So that means that the Board of Education should not purchase the minibuses. Next, the Board of Education needs to look at the internal rate of return in order to make a decision on whether or not to keep the full-size buses or to invest in minibuses. The IRR is a metric used in capital budgeting, measuring the profitability of potential investments. Internal rate of return is a discount rate that makes the net present value, the NPV, of all cash flows from a particular project equal to 0. So let's take a look at that. So what is the IRR on the minibus acquisition? If you take a look at the calculations below, the total initial investment is $231,250. The annuity factor for the IRR is going to be $231,250 divided the net savings of $61,000. This is going to bring us at 3.7%. So if we look at the chart on the next slide, you'll see what the percentage would be for the IRR. After looking at the NPV and the IRR, the Board of Education should keep the full-size buses and save money. Thank you so much for your time today, and now back to our hosts.